I have sold my Tesla today and I want to share with you why. I'm still very bullish about Tesla. It has been one of the best stocks that I have ever bought in my life, and I will buy Tesla again at around 850 when I get back into it. But today I sold my shares and I want to show you the decision-making process, because it's important that you have an exit strategy. You will not make money in investing or in trading if you just buy. You have also to sell. And I know it's hard if you're in this maybe for the first year or second year. This is really hard, and it's one of the toughest but also most important things to learn. So I love Tesla. I went into Tesla at 301. I bought 100 shares and I love it. I believe that Elon Musk is one of the few, very strategic CEOs, and I run a company called Strategy Sprint. So being strategic for me is something that matters, and something that I don't say lightly when somebody is strategic. So here you can see the Gigafactory in Berlin being built. Tesla is on the road to even more, and I'm bullish about Tesla. But I sold. Why did I sell? Let me share with you the exit system. And maybe also let me share with you where was it in terms of trading view today. So Tesla, if we watch the week for Tesla, we are here at $1,195. This is where my limit order went out today, and it's very clear above Bollinger Band, which is it will come down anyways. If you're new to investing and trading, everything develops in waves. And one thing of seeing the wave is to look at the Bollinger Bands, because they will tell you automatically that here, the yellow part, that's the fair value line, that's the moving average. And when you are on top of the Bollinger Band, there is only one thing that will happen. It will cool down again and come back here at some point. Nobody knows when, but the most probable thing is that it will go back to where it belongs. And then you look at the RSI, the Relative Strength Index, which is now at 72. Above 70 is a selling moment, and below 30 is a buying signal. So if it's above 70, it's time to sell. If it's below 30, it's time to buy, because it means it's oversold. And you want to buy when other people sell, and you want to sell when other people buy. This is what the pros do. And beginners, usually they buy when it pumps and they sell when it goes down, which is the only way you will never make money in investing and in trading. Okay, what do we have here? We have volume 10 million, that's fine. It's the most important thing is to see that the basis, according to the Bollinger Band, is at 837, and that we are now absolutely overheated. So it's a good time to sell. But that's the last thing that we look at. So that was the week. Let's look at the hour. And the hour says a similar thing. It's already a little bit calmed down. We see that the RSI came back to 66, and we see that it's less far away from the moving average, from the yellow line, and it's now from coming down from the upper Bollinger Band down to its fair value price, where it belongs. But this is not the reason why I sold. I don't even look at it every day. I had a limit order, I forget it, And then I got an email which said, you just sold Tesla shares. And this is a good system. A good system is one where you can sleep well, forget about it. You don't have to check it every day. And it works for you. It does the right things without emotions, just based on numbers. If you're new to this channel, the elements of your investment system that you need, because in this channel we talk about earning systems, investment systems, and saving systems. And this is an investment system. When you have a portfolio construction system, you have an asset allocation system, you have entry system and an exit system, and the research system and the rebalancing system. Now, this is part of my rebalancing system. At some point, I take profits. I sell things and I buy other things in a certain cadence that I have designed. And you have to design your cadence. I'm not a financial advisor. I will not tell you what your cadence is or how your asset allocation is, but I will share with you how to create an investment system. Because if you have a system, over time, you will build wealth or keep wealth. If you don't, you probably won't both. So let's go to how you create your system. First thing is emotions out, systems in. Just follow the checklist. Emotions out. If you feel like, then you should probably not buy, not sell, not do anything, but go back to your checklist and go step by step through what you have to do right now. And we have checklists here on this channel for everything, both for what to do in a strong market, what to do in a weak market, etc. So in this case, we talk exit strategy. And so my checklist for what to do in strong markets is just to review certain things. And this is my checklist. But the second thing is to take profits. So when something doubles, I sell half. When something doubles again, I sell 25%. And if it doubles again, I sell 12.5%. You see the logic in here. This can go on forever. And no emotions, just doing it. I'm not always perfect with it, but the point is that it takes emotions out. And because I don't want to think about it all the time, I set limit orders. So in this case, I bought 100 shares at $301 in August 2020. And I tell you, I'm bullish about Tesla still. I'm very bullish about Tesla, and I like the CEO and I like the company. I don't like that he's tweeting so much. He should stop doing that and instead do what he's best at, which is being a visionary CEO. But okay, I cannot change that. So when it doubled to 602, I sold 50 shares because it's 50%. Was it easy for me? No, because it was clear to me that it's going up. And even if everybody at 602, everybody was saying, oh, this is nothing, it's going down. And analysts were rating it a sell. Literally, yeah, you can't believe it. If you didn't see it, you wouldn't believe it. Everybody was negative around Tesla, especially here in Europe. Everybody was like, no. At that time, I was working as a strategy advisor to competitors of them, and they really weren't take them so seriously. $602, I sold half, 50%, like my system said. Was it easy? No, but I did it. They doubled again. At 12.04, I was selling again. This was the beginning of November. I sold 25 shares. That's the system. And also the system says that I would sell again at 2,408 if we ever get there. Will we ever get there? I don't know. What's the probability? There is a good probability that we will go there. I see Tesla going there. Of course, I don't know when. And I still hold some shares. But I've also, a couple days later, sold a couple more shares. And now, why? I sold 5 more today. and why. One part of being in a bull market, and you remember everything evolves in waves, so you have to understand which part of the wave you are. Are we at the beginning of the wave, in the middle of the wave when it's wells, or are we at the end of a wave? And then you have oscillations, and at the end of the wave the oscillations are strongest. So if you want to study Elliott waves, there are a couple books that I really like and recommend. One is called The Wave Principle of Human Social Behavior and the New Science of Socioeconomics by Robert Prechter. And he studied Elliott and the Elliott waves and applied them to trading, which I think he did a good job at. But really everything evolves in waves. And so right now we are at the beginning wave, at the absolute beginning wave of the metaverse, omniverse, NFT wave. Absolute beginning. We are maybe at the end of the tech bubble because we were on top of the tech wave, and Tesla is not an automotive company. Tesla is a tech company. I know there are different schools here, but to me Tesla is a tech company, not an automotive company. The cars are not so important. In its model, that's not what they do. What they do is transitioning the world into smarter energy forms, and the main thing is the smart grid. And the least important thing are the single modules, and the modules and products are cars, are different things, but they are not so important. Important is the transition from a not so smart energy form to a smarter energy form. That's what the company is about, and they're doing a great job at it. But when I review here my assumptions on risk and my assumption on cycle, I wouldn't bet my farm that the tech cycle is going on forever. So at some point the tech wave will go down. And so I have to go over my overall allocation. Remember, the system is made of portfolio construction and asset selection. So I have to go over my portfolio construction and say, okay, how much tech do I want in this cycle? And how much tech do I want in the next cycle? So I am very tech heavy in this cycle because the last years I was riding the tech wave with great results. But at some point the tech wave will end, and I see the next wave coming, and I see horses that will be 10 times faster than Tesla. So I go out. I go out of Tesla at 1,200, as I did a couple weeks ago and as I did today again. I will keep some, and I will come back. I will set a limit order at 850. And I will come back into Tesla at 850, but I don't see Tesla doubling in the next 12 months. I think it can reach to 2,400, but not in the next 12 months. Here we're talking more than 12 months. And meanwhile, there are assets that I'm sharing with you that are much better horses. And today I will share a video with you about one metaverse play that for me is a pure 10x, and that's where I will be reinvesting in parts of that. And parts are dry powder that I keep in stable coins to be ready for the next bear market, because we are in a bull market, and after every bull market comes a bear market, and after every bear market comes a bull market. Remember, waves theory, Elliott waves. So with the wave principle in mind, and with my system which says emotions out, just follow the system, it's time for me now to sell Tesla. And I'm sharing this because it's important for you that you have a cycle of getting in and out of things. I also have a visual version of this. Where is the visual version? I think it's here. Yeah. So how to secure downside risk. Quite simple. You start, let's say you invest 1% in one thing. And because 1% I would go in if it's a highly speculative asset. let's say you buy right now a metaverse play, which is 5 years away from being in the middle of the wave. As soon as it doubles, you sell half. When it doubles again, you sell 25%. When it doubles again, you sell 12.5%. Why? You want to take some profits and reinvest them into stable coins so that you have dry powder when the next dip comes. You want to be ready to reinvest, because it might be that you wake up in the morning and say, oh, my favorite stock is down 27%. Well, that's time to buy. And if it's your favorite stock and if it's a very good stock, it will not be very long at minus 27%. That might be just a reaction to something that was in the news. So you want to be ready to take that opportunity, because this is when money is made, when things are at a discount. And discounts happen all the time. Even in a bull market, there are moments where things dip down. So you want to always be ready to invest. And you do that by having dry powder, and the dry powder not having it in cash, not in fiat money, but having it in stable coins that you have ready to use when you need them. Hope that helps, and keep rolling, everybody.